Welcome to the deep dive. Okay, today we are jumping straight into the crypto fast lane. We're looking at the Plasma XPL Token 2025. It's pretty controversial.
It really is.
And looking at the analysis, this one big question jumped out. Why do something like 70% of new crypto investors seem to chase these really hyped tokens, like XPL? I mean, is it FOMO? Is it smart strategy? Or maybe just, wishful thinking?
That's exactly the core tension, isn't it? And our mission here today is really to cut through that noise for you. We want to pull out the main claims, the big revolutionary promises XPL is making,
Right.
and then hold those right up against the significant risks and maybe the murky details hiding underneath. It's all about giving you a balanced perspective on this thing.
Okay, let's get into that pitch then. XPL has done a pretty good job branding itself as the Ferrari of blockchain.
Yeah.
And that's not just a cool name, right? It's a direct promise. Faster, sleeker than the older networks it wants to replace.
And they put numbers on it, aggressive numbers. They're talking lightning speed transactions, specifically 5,000 transactions per second, TPS.
Wow. Okay.
Which, when you compare it, a lot of the older guys are still struggling to hit, 15, maybe 20 TPS.
Big difference.
Huge. And they pair that speed with dirt cheap fees. We're talking fractions of a penny. Makes it super attractive for, frequent trading or small payments.
Speed and low cost, that's definitely a powerful hook.
Yeah.
But the vision seems broader. They're promising the full package.
Oh, yeah. Full DeFi integration, compatibility for complex dApps, the applications, staking rewards so you can earn passively on your tokens, and even a say in project decisions, like democratic governance. They're basically selling a complete upgrade on the foundation.
Total overhaul.
They are. But, okay, this is where we need to pause.
Yeah.
Because the promises, they start to bump up against some real issues with trust and transparency. When you actually dig in, things get murky.
Okay, so let's peel it back. What are the red flags? You mentioned 3 critical ones. What's the first?
The first one is about the team itself. The development team is only partially anonymous.
Partially. How does that work?
Well, it's a bit nuanced in DeFi. Full anonymity is common, right? But partial anonymity means, some folks might be known, others aren't. Or maybe they step forward when things look good, like the price is pumping.
Oh, I see.
But they can still kind of fade back if things get tricky, like regulatory heat or tech problems. It means accountability is sort of optional. That's a big liability for investors.
Okay, so high performance claims, but high ambiguity on who's actually behind it. What's the second flag? Regulation.
Yeah, it's basically nowhere in sight. There's no clear regulatory approval. And for any project that wants to go mainstream, work with institutions, last long term, that's a huge question mark. It means the rules could just change overnight, potentially changing everything about the asset itself.
Right, instability. And the third flag, something about audits, due diligence.
Exactly. Audits are crucial for security in this space. Now, XPL mentions external audits, but there's a real lack of independent public proof.
So you just have to trust them. Trust this partially anonymous team.
Pretty much. You're asked to trust their word on the security of the tech holding potentially a lot of money.
Okay, that sounds risky.
It is. And you see this lack of transparency reflected in how the token actually behaves in the market. It has been an absolute roller coaster.
Right.
Meaning our analysis showed periods where it jumped like 400% in just a week.
Wow.
Followed almost right away by, say, a 65% drop. It's driven by pure speculation, not really fundamentals.
So connecting this back to the listener, what does this volatility mean for you? The source material seemed to draw a line here.
It did.
For maybe seasoned traders, people who are comfortable with that kind of risk, maybe even thrive on it. This volatility could be exciting. They might have the capital to handle those big swings.
Absolutely. For the experienced trader, it might be a playground. But, and this is crucial, for the learner, especially if you're newer to crypto, the advice has to be tread very carefully here.
Right.
The risk profile on this token is extreme, and that non-negotiable rule always applies. Seriously, never invest more money than you can actually afford to lose.
So let's sum it up. We have a token promising Ferrari speed lightning transactions, super low fees.
The dream package, technically.
But it comes with a partially anonymous driver, no confirmed independent safety inspection via public audits, and no clear regulatory roadmap.
That's the tension right there. And maybe this brings us back to that first statistic. If 70% of new investors are drawn to this kind of hype, it makes you wonder, doesn't it? When does the promise of genuinely cool tech like the speed and the cheap fees stop being about actual innovation and start being more about, well, a psychological gamble? playing on people's fear of missing out or just their greed.
That's a really sharp question to end on. When does innovation become just a gamble, something for you all to think about?